Hello everyone. Today, I'd like to go over what we've achieved in developing the Trading Way neural network over the past 2 years. I'll cover our actual trading results using this recurrent neural network, what features it has, and how they can help you trade in any market, whether it's the stock, financial, or crypto market. Let's start with the first feature, AI forecasts. This allows you to request real-time forecasts for any ticker. There are over 200,000 instruments available. To do this, you'll need to go to Telegram, open the mini app using the Way app button and select AI forecasts and technical analysis. This will give you the ability to enter a ticker and choose the instrument you need from this entire list. In real time, the neural network will process information from data centers based on historical data, and it will calculate an analysis using technical instruments and real-time volumes. So you can type in anything. For example, let's say you're trading Ethereum. You just type in its abbreviation and what you want to analyze it against. You select the data center you need. I usually choose Binance, and then you select the time frame. You click Create and send the data to the neural network for processing. The neural network then processes a huge amount of instruments, data, and technical analysis, over 300 methods of analysis. This ranges from graphical analysis to technical oscillators, indicators, analysis methods, wave analysis, and so on. It then selects the best model based on the Sharpe ratio of the mathematical expectation, if one exists. If the market is in a zone of uncertainty, the neural network will also inform you of this and filter out the signal. If everything looks good, there's a high probability of success, good volatility, and enough liquidity for the trade, then the neural network sends you a calculation like this one. And here we have the calculation for Ethereum that just came in. Let's break down what it looks like. First, the neural network calculates volatility. Also, among other things, it calculates the direction of the future price movement. In other words, it builds a model with a probability of success. The probability of success is right here, and this is the model of the future price movement. It includes a calculated entry point, the entry point, stop loss, and take profit. And for this trade, for this setup, it also calculates the risk management, which is very important. This tells you what percentage of your deposit is best to allocate for the trade based on the stop loss, what you'll ultimately gain in profit from this trade, and what your risk to reward ratio will be. The neural network also calculates key levels based on pivot points. You can use these as well. I use them, they work very well. I like them. Here's the calculation for the resistance and support levels. And in general, it shows all the information in real time, including the starting point. So if you're using a market order, this is the point when it's best to open it. That is the time and the entry point. It also calculates volatility. Volatility is a pretty strong indicator. It's not just ATR, but a huge number of other indicators that calculate this factor. Besides volatility, the neural network also considers liquidity. And all of this comes to you for the time frame and instrument you requested in real time, which gives you an advantage over any other traders who just use some oscillators or indicators. They are often lagging. Here, the neural network processes huge clusters of information on technical instruments, and it does so in data centers. The neural network rents data centers where it calculates and stores information from previous years on volumes, as well as real-time data. And it uses this to continuously train and build the model. The key is, the more a user uses the neural network, the better the results and the more the network learns. And it calculates the coefficients more effectively, making the model more accurate, which is clearly reflected in the trading results. But this tool is good to combine with your own technical analysis. That is, you've done a technical analysis of the market, conducted a technical analysis, and you want to understand what will happen, say, with this particular chart. So let's say we have a chart of the Japanese yen. We see that right now. We can notice this kind of impulsive upward movement. Just a second, all the information will load. So we can see we have this impulsive upward movement. And we need to understand what we should do. We've approached the first, the second pivot level, the resistance, and here you could say on the hourly chart, the price has consolidated and doesn't know what to do. And here we have two possible scenarios. Either we'll go and break this level, consolidate above it, and continue along this impulsive upward short-term trend, right, on the hourly chart. Or we'll hold at this level, maybe make some kind of false breakout, and then bounce off this level. So this is essentially a point of uncertainty where we can't understand exactly where the price will go in this case. And this is where you go and make a request to the neural network in real time. So we're looking at the US dollar Japanese yen. So we enter the ticker USDJPY. You can enter any ticker. Maybe if you trade crypto, you can enter crypto. If you trade on Forex, you can select Forex instruments. If you trade stocks, you can select stock instruments. But the only thing is the neural network doesn't take into account the fundamental background. That is, the neural network is built on real-time data and processes data based on historical factors from data centers. So in general, its calculation is based on technical analysis and overall on chart patterns and so on. That is, there are more than 300 types of models, and it chooses from them, well, using, let's say, weights, the best ones based on the Sharpe ratio and mathematical expectation. Then it takes real-time volume data, runs the model again, and builds the model based on the instruments it selected using the Sharpe ratio and mathematical expectation. And from there, it builds a model of future price movement. And after that, these models are constantly saved, and every 2 weeks, it retrains on the models it built itself before and filters out the models that perform the worst. That's why its results get better. And what's great is that at this moment, when you requested a real-time analysis, it saved that data and then adapts to changes in the chart over the entire period. So over 2 weeks, it retrained. Then it adapted to the values for which you constantly made requests. After 2 weeks, it's already executing its models better. So we've requested a calculation. Let's see what we got. In the end, our neural network shows that right now is a point of uncertainty. There's low volatility and it's best not to enter a trade. So we have a zone of, let's say, uncertainty and a neutral trend. It's better not to enter this position at the moment. So this is also a good setup, meaning sometimes it's better to refrain from trades on certain instruments at certain times. It's better to enter proven setups when there's a good probability calculation, a stop loss. Like, for example, here we have the probability of the model working out, a risk-reward ratio of 1.53. But I generally recommend using, a minimum of 1 to 3. So if your risk-reward ratio, you risk, say, 1%, then the profit should be 3 times greater. That's the minimum. And right now we'll talk about this. So in this case, you do your own analysis and then use the neural network to check the confirmation of your analysis in real time, which is very, very convenient. So I, for a year and a half, traded exactly like this, and I've made a profit of 2,400%. And now I trade using signals. Here are my current results, and I'm launching a PAM account in real time. For anyone interested, this PAM is currently trading. Here it is. And you can connect to the PAM conditions, PAM management, with my help as a trader and with the help of the auxiliary tool, the neural network. I trade on the PAM using AI signals. Let's look at the second function, what it is. We'll go over it briefly now. If you like this video, I'll break down each function in more detail. So there's this feature called AI signals. Here you can set up more, up to 10 instrument tickers. So what does that mean? So the neural network in real time, in the first case with AI forecasts, you were the one finding the entry point where it was best to make a request. And it, at that entry point, right where we were just now, it calculated the model for you based on the time frame, the instrument that it showed you, and so on. And it sent the calculation at that point. But with AI signals, you set up a subscription for the instrument that you want the neural network to constantly make requests for itself and look for the best entry setups based on first the probability of success. So you set the probability percentage, you use the slider to set the percentage that you want, so that if such a setup forms on the market for that instrument, for that time frame that you specified, based on the probability of the price movement model that it calculated for you, if it is higher or the same, the neural network sends it to you. And with the same risk. That is, if you have a risk ratio of, say, 1 to 2 or higher, there is 1 to 3, 1 to 4, and the setup finds a neural network. It sends you information on the instrument that you set for tracking. And you can track up to 10 instruments, each with 3 time frames. That is for an hour, a 4-hour day, and a day. The point is, what is it? On each time frame, the neural network calculates a model for 10 candles. That is, let's say if this is an hourly chart, then we go in, this is a 4-hour chart. Let's give an example. Here is a 4-hour chart, and we have a model calculated that is each candle 10 candles ahead. And this is a model of price movement in advance. And so let's say the neural network sent me a signal about the euro dollar. I entered it. Why did I go through it? Firstly, because we have a risk-reward ratio higher than 1 to 3, that is, which is best suited to my parameters, which I have set for myself. Secondly, you see the order is at market price, meaning I am already in a position. And there is also a 75% chance of it working out. And we have a price movement model with a probability of 75%. This is what it looks like, which suits me. That our stop loss is small, but the profit ratio is much greater than the stop loss. This model suits me, so I entered the position. Right now, I'm actually in profit. Here it is, the euro dollar, and at position 340, it is $3. This position is currently bringing me profit. And overall, in a year and a half to 2 years, I've already started making money with AI signals. This is the result. That is all my accounts, and this is exactly according to AI signals. This is according to AI forecasts. That is, in the first case of AI forecasts, we get a moment when, well, for example, in terms of percentage, here is the profit percentage, here is the profit percentage, here is the profit percentage. That is from April 2024 to December 2025. I have these results. Here is 2,500% profit traded. And here is the profit on interest. And all this is precisely thanks to this neural network, which calculates price movement patterns in advance. And you can get the same signals by tuning. That is, signals arrive in Telegram in this form. For now, come in, just click. You receive the signal, you click. In more detail, you will see a full report. In this report, we can already see all the information. And also prices for the nearest ones. 10 candles, what will happen at the opening of each candle on, say, a 4-hour chart. The hourly chart is medium-term intraday trading, or more precisely, intraday trading. The 4-hour chart is medium-term. It will work within 48-50 hours. A day off will work for 1 to 10 working days, that is regarding the stock and financial markets. There, weekends are also calculated. If it's crypto, then naturally there is no model for up to 10 working days. Weekends, so the market is always open. So what other tools do we have? Let's go over how to set it up to make it clear. How do you set up AI signals? AI signals are quite easy to set up. You go in, press the Way app button, then select AI signals, and it takes you to this screen. Here you can select up to 10 tickers. See, 10 tickers, 10 instruments. You go in and choose the instrument you need. Let's say, for example, the company Apple. You type in the Apple ticker, select the exchange that suits you best. For me, Nasdaq is the most suitable. There, Nasdaq. You choose the time frame, let's say the daily chart, and you set the risk to profit ratio you want for the setups the neural network sends you, and the probability of success. I usually set it from 65. So, if it's 65 and above, the neural network should send the signals. Naturally, the higher you set the risk to profit ratio and the probability of success, the fewer signals you'll get, but they will be more accurate. And after that, here's what happens. You get a signal. For example, a signal just came in at 1545 for gold, XAU USD on the daily chart. Let's analyze it. Let's open it. What do we see for gold? The risk to profit ratio is 9.94, which is fantastic. I mean, it's a really incredible, excellent setup. And the probability of the model working out is 75%. So this is what the model looks like. And the probability of it working out is 75%. But our neural network doesn't consider fundamental factors, so the probability is a bit lower than 75, maybe even around 60, because it doesn't account for the fundamental background. If you've read the news and see that the fundamental background also aligns with this forward price movement model. For example, we know the dollar is strengthening, the GDP figure came out excellent, let's say, and instead of the expected 2%, it came out at 3.5%, then naturally the dollar will strengthen. So that's good confirmation for this model, and you can, for example, enter a position here. And you just go in, set your stop loss, take profit, and entry point, and you take your profit. So in the first case, with AI forecast, you do your own analysis and then check it with the neural network. In the second case, the neural network finds the setups for you, sends them, and you just check them against the fundamental background. If the fundamental background confirms the setup, we just go ahead and enter. I think it's clear how to use all this. So if you're interested, go ahead, use it, subscribe. The subscription for the neural network costs this much, and here are the packages themselves. AI signals are included in the 6-month and 1-year packages. So you can subscribe to this neural network using these packages. Alternatively, you can go to our channel, write to our manager on Telegram, and connect to the PAM management using the neural network and forecasts to this account here. So, to connect to the PAM, first you need to create an account with our partner broker. Second, you then link that account to our PAM account. Fund it, get verified, link the investment, and for a term of 90 days, this PAM will be yours. And you can withdraw the profit that will be earned, but you won't be able to withdraw, let's say, the principal for 90 days. As soon as that 90-day period is over, you can withdraw both the percentage of profit and the principal itself. Thank you all for your attention. This was Trading Way. I'm Maxim. See you soon. Use technology and you'll be one step ahead of the market.